Ever wondered if your dream car, that sleek SUV or that powerful truck, is just a credit score away? You picture yourself behind the wheel, cruising down the highway, but then that little voice in your head whispers, "Can I even qualify?" We've all been there, that moment of hesitation before applying for auto financing, wondering if our credit score is up to snuff. Today, we're tackling a question that's on the minds of many aspiring car owners. What credit score do you need for Ally Auto Finance? It's not just about getting approved, it's about understanding the financial landscape and making informed decisions. So, buckle up, because we're about to explore the ins and outs of credit scores and Ally's lending criteria. Before we zero in on Ally specifically, let's take a moment to understand the broader context of credit scores and auto financing. Your credit score is essentially a numerical representation of your creditworthiness. It tells lenders how likely you are to repay a loan based on your credit history. In the United States, the most commonly used credit scores are FICO scores, which range from 300 to 850. Generally, a higher score indicates a lower risk for lenders, meaning you're more likely to get approved for loans and secure better interest rates. Now, why does this matter for auto financing? Well, when you apply for a car loan, lenders like Ally Auto Finance assess your credit score to determine the level of risk involved in lending you money. They want to ensure they'll get their money back, and your credit score is a key indicator of your financial responsibility. It's important to remember that credit scores aren't just arbitrary numbers. They reflect your past financial behavior, including your payment history, the amount of debt you owe, the length of your credit history, new credit inquiries, and the types of credit you use. Maintaining a healthy credit score requires consistent and responsible financial habits. 1. www.contemporarymortgage.com. www.contemporarymortgage.com. Diving into Ally Auto Finance. Alright, let's get down to brass tacks. What credit score does Ally Auto Finance typically look for? Unfortunately, there's no magic number. Ally, like many other lenders, doesn't publicly disclose a specific minimum credit score. They consider a range of factors beyond just your credit score, including your income, debt-to-income ratio, and the specifics of the vehicle you're looking to purchase. However, we can talk about general industry standards and what that means for Ally. Generally, a credit score of 670 or higher is considered good, and it's likely that you'll qualify for better interest rates and loan terms with a score in this range. Scores between 580 and 669 are considered fair, and while you might still qualify for a loan, you may face higher interest rates. Scores below 580 are considered poor, and it can be more challenging to secure financing. Ally Auto Finance, like other lenders, does have programs designed to assist those with less than perfect credit. They understand that not everyone has a pristine credit history, and they aim to provide financing options for a broader range of customers. However, it's crucial to understand that if your credit score is lower, you'll likely face higher interest rates and potentially stricter loan terms. Now, let's talk about the other factors that Ally considers. Your income plays a significant role in determining your ability to repay a loan. Lenders want to ensure you have a stable and sufficient income to cover your monthly payments. Your debt-to-income ratio, which is the percentage of your monthly income that goes toward paying off debt, is another key factor. A lower debt-to-income ratio indicates that you have more disposable income and are less likely to default on a loan. The vehicle you're looking to purchase also matters. Lenders consider the vehicle's value, age, and mileage when assessing your loan application. A newer, lower-mileage vehicle may be seen as a lower risk compared to an older, high-mileage vehicle. Additionally, the amount of your down payment can also influence your loan terms. A larger down payment reduces the amount you need to borrow, which can lead to lower interest rates and monthly payments. So, what can you do to improve your chances of getting approved for Ally Auto Finance? First and foremost, check your credit report and address any errors or discrepancies. You can obtain a free credit report from annualcreditreport.com. Pay your bills on time, reduce your outstanding debt, and avoid opening new credit accounts in the months leading up to your loan application. Consider getting pre-approved for a loan. Pre-approval allows you to shop for a car with a clear understanding of how much you can borrow and what your interest rates might be. This can give you a significant advantage when negotiating with dealerships. If you have a lower credit score, don't despair. There are still options available. Consider working with a cosigner who has a strong credit history. This can help improve your chances of approval and secure better loan terms. Be prepared to provide documentation of your income and employment history. It's also essential to understand how interest rates and loan terms work. Interest rates are the cost of borrowing money, expressed as a percentage of the loan amount. Higher credit scores typically qualify for lower interest rates, saving you money over the life of the loan. Loan terms refer to the length of time you have to repay the loan. Shorter loan terms mean higher monthly payments but lower overall interest costs, while longer loan terms mean lower monthly payments but higher overall interest costs. When considering an auto loan, carefully evaluate the interest rate and loan terms to ensure they align with your financial goals. Don't just focus on the monthly payment, consider the total cost of the loan, including interest and fees. Ultimately, securing auto financing is about more than just your credit score. It's about responsible financial planning and making informed decisions. Before applying for a loan, take the time to assess your financial situation, determine how much you can afford, and explore your financing options. Don't rush into a purchase without thoroughly researching your options and comparing loan offers from multiple lenders. Ally Auto Finance is just one of many lenders available, and it's essential to find the loan that best suits your needs and financial situation. To recap, while Ally Auto Finance doesn't publicly disclose a specific minimum credit score, a good credit score of 670 or higher will generally qualify you for better interest rates and loan terms. However, they consider a range of factors beyond just your credit score, including your income, debt-to-income ratio, and the vehicle you're looking to purchase. Improving your credit score, understanding loan terms, and careful financial planning are crucial steps in securing auto financing. Remember to check your credit report, pay your bills on time, and explore your financing options before making a decision. Don't be afraid to ask questions and seek professional advice if needed. With that said, thanks for watching, and until next time.